Hello dear Forex traders, welcome to IC Markets. You are watching weekly market overview by IC Markets. Let's start. The US currency managed to regain few ground from its main competitors last week. The dollar index rose by only 0.3%. The outsider was the Australian dollar, which lost 3.9%. Other major currencies, even if dropped in value, lost much less. The Canadian dollar closed the week having lost 1%. The British pound dropped by 0.6%. The Japanese yen fell by 0.5%. The euro and the Swiss franc remained almost unchanged. Contrary to all the expectations and forecasts, the previous week did not give clear answers to the question of how the situation will develop in the Forex market. The meetings of Fed, Bank of England and the ECB were in the center of attention, as well as GDP and employment data in the United States, which altogether, to say frankly, left us with mixed feelings. Despite the US economy grew by 1.7% in the second quarter, the Open Market Committee is in no hurry to admit that it's time to cut the QE program, trying its caution to a vulnerable labor market, where, by the way, unemployment decreased to 7.4% in July. However, this figure was overshadowed by non-farm payrolls, which fell short of forecasts by 20,000 and finally caused a dollar depreciation on Friday. In our point of view, however, the macro statistic data from the US is not so bad, and the dollar will eventually get wider support, though it can happen later on because the markets need unambiguous signs of improvement in the labor market. In its turn, the ECB also left policy unchanged. According to Mario Draghi, the governing board of the bank expects that rates will remain low for an extended period of time, though the chairman of the ECB acknowledged the emergence of preliminary signs of recovery in the Eurozone. This week, we are waiting for the meeting of the Reserve Bank of Australia, which will end on Tuesday with a probable interest rate cut to 2.5%. On Wednesday, the long-awaited inflation report of the Bank of England will be released, which is expected to shed light on the future policy of the regulator. On Thursday, the Bank of Japan will end its policy meeting. Foreign trade data in China and employment data in Australia will be released. Finally, on Friday, we will be waiting for fresh price, production and sales figures in China, as well as employment data from Canada. According to the latest report of the Commodity Futures Trading Commission, futures market participants keep net short speculative positions on all major currencies against the US dollar. Moreover, the largest positions are observed on the Japanese yen, the Australian dollar and the British pound. Last week, major changes in the positioning were observed on the European currency, which could significantly reduce the amount of the net short position. Overall, positioning reflects our medium-term view on the currency market, with the strengthening of the dollar as one of the main trends of the second half of the year. Returning to the short-term picture, let us note that following a 4-week fall, all corrective targets for the greenback came to be overfilled, but the short-term technical picture still looks vulnerable. Thus, the euro-dollar came back to around 1.33, where the next area of resistance is. For the past 6 months, the euro remains locked in a range of 1.2750 to 1.3400, and we do not see any reason to overcome its upper limit yet. The pair pound-dollar is currently at 1.5300, below an important tactical resistance area around 1.5400. The dollar-yen remains below 100, being traded around 4-week lows, and the Australian dollar broke through support at 1.9000, having set new 3-year lows, expecting a rate cut by the Reserve Bank of Australia. You are watching weekly market overview by IC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Bye.